Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Health and Happiness H&H International Holdings Limited latest report. Health and Happiness H&H International Holdings Limited offers a diverse range of products and services across various categories. The company's product portfolio includes pediatric nutrition, baby care, adult nutrition and care, and pet nutrition and care products. The company manufactures and sells milk formulas for infants, children, and expectant mothers, as well as probiotic and nutrition supplements in the form of sachets, capsules, gummies, and tablets for infants, children, and expectant mothers. Additionally, it offers vitamins, herbal and mineral supplements, skincare, and sports nutrition products for adults. In terms of baby care, H&H International Holdings Limited provides dried baby food and baby care products, while its pet care segment includes complete pet food products and multi-condition pet supplements. The company is also involved in the research, development, manufacture, sale, and processing of various nutritional products, including meat, fruit, vegetable powder, candy, and special nutritional food. Furthermore, H&H International Holdings Limited engages in marketing and distribution of organic baby food, wholesale, retail, import, and export of nutritional food and personal care products for infants. The company also provides packaging services and trades and sells vitamins, health supplements, skincare, and sports nutrition products for adults, as well as pet food and nutritional supplements for pets. In addition to its product offerings, H&H International Holdings Limited also provides online sales and software and information technology services. Its products are sold under various brand names, including Healthy Times, Biostime Changsha, Farmland, Swiss, Oralia, Zesty Paws, Solid Gold, Dodie, and Good Gout. Health and Happiness H&H International Holdings Limited maintains a market capitalization of $8 billion, broadly in line with the industry peer group. Health and Happiness H&H International Holdings Limited trades at a higher price-to-earnings ratio of 35 times and a higher price-to-book ratio of 1.14 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 69% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.88%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Revenue growth is primarily driven by the expansion of global footprint through strategic market entries, launching new brands in international markets, and growing market recognition in additional markets. The company's focus on organic growth across its 3 business pillars, ANC, BNC, and PNC, has also contributed significantly to revenue growth. Additionally, targeted innovation in product development, such as the extension of flagship brands into new markets and the launch of halal-certified products, has driven sales. The company's commitment to meeting consumer demands for healthier options is another key driver of revenue growth. This includes offering products with enhanced nutritional quality and tailored health benefits, expanding availability of products to target consumers across existing markets, and launching new products with no added sugar in the BNC segment. The growing demand for infant nutrition products with limited or no added sugar has also contributed to revenue growth. On the other hand, revenue decline is primarily driven by non-compliance instances in France and areas for improvement identified in audit by Bureau Veritas UK. Hazardous waste generated increased by 50%, which could potentially lead to a decline in revenue if not addressed promptly. The performance of various regions and segments in the company's revenue has been analyzed. The Chinese mainland emerged as a top performer, contributing 71% to the total revenue. North America also performed well, accounting for 12% of the revenue. In contrast, Australia and New Zealand lagged behind with an 11% contribution, while other territories including Europe and Asia, excluding Chinese mainland, had a relatively low contribution of 6%. In terms of segments, Adult Nutrition and Care (ANC) and Baby Nutrition and Care (BNC) were the standout performers, generating RMB 6,946.4 million and RMB 5,257.3 million in revenue respectively. On the other hand, Pet Nutrition and Care (PNC) was a poorly performing segment with a revenue contribution of RMB 12,149.9 million. Management is emphasizing a long-term sustainable approach that benefits all stakeholders. The company's overall strategy focuses on consumer-centric growth through three business pillars: ANC, BNC, and PNC. This approach will drive organic growth and create lasting value. Innovation and research are crucial to the company's success, with a focus on continuous development of team members and driving innovation through clinical research and investments in science and technology. The company is also committed to reducing its environmental impact by investing in sustainability initiatives and setting science-based targets for suppliers. Quality and safety are top priorities, with a focus on excellence in all operations and the implementation of stringent measures and certifications. Social responsibility is also a key aspect of the company's strategy, with a commitment to fair work practices, respect for people, and prioritizing sustainability practices. The company is taking a proactive approach to tax strategy, focusing on long-term planning and transparency to enhance shareholder value and build trust in regions where they operate. Finally, supply chain management is being prioritized, with a focus on achieving greater transparency and sustainability across the entire value chain. The company's financial history reveals that they have indeed distributed profits to their shareholders through dividend payments. This indicates a commitment to rewarding investors for their loyalty and investment in the company. On the other hand, there is no record of any share buyback programs being implemented by the company. This suggests that they are focusing on reinvesting earnings into the business rather than repurchasing existing shares. Concerns about inventory buildup or supply chain disruption. The extracted summaries reveal some concerns regarding inventory buildup and supply chain disruption. On page 70, it is mentioned that transitioning to smaller vials may lead to increased packaging costs and potential stockpiling of larger vial sizes. This indicates a possible issue with inventory management. Furthermore, on pages 113 and 115, there are mentions of supply chain governance concerns related to environmental and social topics such as GHG emissions, climate risks, and labor rights. Additionally, 3% of suppliers did not participate in the sustainability assessment, highlighting potential areas for improvement. Supply chain disruption is also a concern, particularly due to reliance on third-party suppliers and key contract manufacturers, page 109. Extreme weather events may cause disruptions to infrastructure and services, resulting in operational downtime and financial losses, page 78. However, it's worth noting that many pages mention, none mentioned, or no concerns about inventory buildup or supply chain disruption, indicating that these issues are not a significant concern for the company. That concludes the financial summary for Health and Happiness, H&H International Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.